Hello, this is Coach Mike from winningstockcoach.com. I'm going to get started with my weekly market overview video for the week ahead, the week beginning June 15th, 2015. Over the past few weeks, we've talked about a pullback target 2076.73 with the SPX, and that's the chart I'm talking about to start here. You know, we got a very large string of weekly videos out there, and as it seems, well, we claim to be able and accurate with the video proof of being within 0.5%, 0.5%, that's 1/2% of the tops and bottoms, and we've done that now 58 times in a row. I'm going to move this over to the daily chart, and I want to look at a little something. And you know what we're looking at here is the ability to make profit on a change in direction within 0.5% of our target. Hey, we got within 0.5% of our target. Now, on that daily chart, Friday, Thursday, I kind of had a little bit of fears, but that Friday could leave us looking with this evening star. And really what we got to watch is something a lot more simple than what most might expect. What I'm actually going to do is pull over a 60-minute chart. Here you see it. This is a 60-minute chart of the SPX. From that low marked with Fibonacci retracements. Now there's a little rule of trading that people call the 50% rule, and basically what that rule states is that any move that does not give up more than 50% of that move is showing strength in that direction. So we had this fall on the S&P, but look where we consolidated at. Look where we consolidated at for the majority of the day on Friday, right at that 50% line. So one thing we've got to look at is, even though you had the kind of a down day, a relaxer day, whatever you want to call it, on Friday, it actually, as bad as it might look on the daily chart, did not exceed that 50% retracement. So in reality, the trade plan moving forward is very, very simple. That 2093.26, that 50% line, that's your support level. If we make a positive move from here, we're going to be expecting a swing up to that 2138.93 area. If we continue negative from this point, understand that we've got a few little targets we could hit, and I think our most likely target is probably this 2052.44. That'd be based on this lower high after a lower low in this sequence. But also, if you look at the low close before this up move, right here, 2080.15, sadly, when we come over here, 2079.28, our lowest close in this fall was actually a little bit lower than this one, which actually could give us a little bit of a hint being made that any up move might lead to a lower high, in which case we would use this Fibonacci extension tool, mark the 50% move of that, and see that we actually got right into an indication of what could produce a negative move. Now, I showed you on the 60-minute chart that 50% retracement of the up move, and like I said, any positive move from here, the support level is no longer down here. It is literally right along this close from Friday. And essentially, you can really look at, we'll say, the low a day from Friday. That's a very, very simple value to use. If you drop below the low a day from Friday, you should at least double bottom, whether it be this low wick or even off of this 2079.28 area. But I believe the higher probability is to get down to this 2052.44. Now, I traded long. I started scaling into trades, very small, 1/3 position entries, maybe a half position, very small for the initial move. There in the chat room, I spent 2 weeks guiding people down into this fall, where it would go to, and how we would prepare for the bounce. We took the initial move, smaller position, less overall risk. We get this positive move on Monday, and it's very, very simple. We scale in again to our swing trades. In fact, the excitement that I have, and I hope you can hear in my voice moving forward, is really, really simple. If we fall down from here I don't have much risk. And in fact, I'm not even in a full position. I could leverage those positions. I could do whatever I choose. But guess what? In our chat room on Thursday, we alerted a leverage play that one single trade would mathematically be calculated to, at 100% win or better, completely pay for all the money we had in any long trade that we took down here. Guess what? We hit over 200% on that trade. So now not only is every long entry we have right now completely free, we've already got that capital back in our accounts, but just on the original trade plans we had for those longs, we're not more than 1/3 to 1/2 a position in it, giving us further ability from this point, even if it huddles a little bit sideways for a day, to actually either just take the other side for a move that would be replicated in our stocks based on the beta value of those stocks down to this 20.5244, or on the up move to take the remaining part of the trade up to that 21.3893. Honestly, we couldn't ask for a better situation. The markets have been kind of kooky, a lot of hoopla in them. I don't want to try to minimize that. But this is probably the best chart setup and best trading situation that I think we could have been placed into over the past at least 6 to 8 months, if not at least the past year. They've made it easy for us. Don't think, just react. You know what to do. Let's go over to the DJI, Dow Jones Industrial Average. Very similar type pattern. But if I go over to the weekly chart, which is really what tells me a lot, we are and have been still holding this swing low support level, 17,712.66. I've been talking about it for 2-3 months now. You had a lot of consolidation, one little pop, and then a drop right back in that range. So long as that 17,712.66 holds, that's our support. Any short-term trades need to be with a very, or any short trades need to be with a very short-term mentality. Little day trades to pop down to that support. Now you fail that support, you might want to enter your swings to the short side for your next support level right here at this weekly close, 17,164.95. And I wouldn't trade out very far for that. I mean, if you're trading the options, you'd be okay to take your puts 1st of July, but I prefer the monthly, so I would go with the July 17th expiration. Very good situation. You don't need to trade out forever. And then should that level fail, well, then maybe it's time to get into your August, September timeframe for lower goals. But very, very easy situation to trade in right now. Going to go over now to the RUT. This is the Russell 2000 Small Cap Index. If you guys remember, about a month and a half ago, I said this one actually has the most room to the upside. Everything else had taken off, and this made this wee little green candle. Well, here we are, hitting at our resistance point. Momentum's created when you break resistance or fail support. So with an up move, we'd expect a momentum, a fairly quick move up to that 1287.52. But it is resistance, and two basic assumptions you need to make as a trader is support will hold and resistance will not be broken. Make assumptions that force you to not trade but pay attention. Because the big trades are created when your assumptions fail. The momentum trade is created when I'm assuming this resistance won't be broken. But as soon as I can break 1267.54, the trade is created. And those are for your momentum trades, your faster trades, the ones that people want the instant gratification. Those are the ones you have to go after, not this ding, 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 ding 6 weeks later. Those are your swing trades or your longer term position buildings. You can make money off of that. You can make money if it pulls back from here, trading out to August, September with ding, 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 little move via put options. But if you want that quick instant gratification, assume that resistance will not be broken. And when it is, watch your volume, because momentum trade up to your target. And it stays very, very simple. It's actually not a hard process at all. We're going to go over to the NDX now. Oops, I typed in the wrong ticker symbol, so give me a second to correct that. NDX. This is the NASDAQ 100. Now, I've talked for about a month about the consolidation pattern it was in, how we needed to wait for it to break above the weekly close value 45.3678, and we needed to watch our support of a weekly close of 44.5865. We dipped real hard through the week, and we still failed to close above our support level. This support has now been failed. If there is any negative in the market, your NDX chart is actually the one showing the most bearishness. Your technology stocks, stocks like Apple that kind of fell a little bit ridiculously hard this past week, that you could take into a modest shorter term swing that you might only be in 1 to 2 weeks, down to this 43.3912 or 42.9409. We've got to watch this support area here. This would be just a shorter term, more of a momentum trade as well. Very good risk to reward on the fact that if you rise above 44.5865, you would not be in the trade. You could trade that through the QQQ ETF. You could trade it through stocks like Apple that make up 13% of the NASDAQ 100. Very, very simple situation to trade in this week ahead, and I'm excited about it, and I'm excited to trade with the members of the Coaches Roster newsletter. I'm looking forward to being live in the chat room each day, working with you and finding these trades. We know what to look for. We simply need to react to it. Our watch list is simple for this upcoming week. And even though I send out the market overview video to both paid subscribers to the Coaches Roster newsletter and a free list, as well as putting it out public on my YouTube and all my other social media, my trade plan's simple. We've already planned the trades. We spent 3 weeks planning the trades that we're building right now. And we're at a perfect point where any more down tells us exactly what to do. And any more up tells us exactly what to do. And we've already got the foundations of those positions built. Any other stuff we do in the chat room is probably going to be some shorter term trades, but we're going to focus on continuing to build our swing positions. Our after hours small group, it's a trading group that's designed for people that can't sit and watch the markets all day. I meet with them at 8 p.m. in the evenings. We use a lot of conditional orders and such to build our positions. When you guys watch, when the participants in that group watch this video, understand that we are literally in a position where for our Monday night meeting, our 8 p.m. meeting tomorrow night, we're going to know exactly how things are going to go for us, and we're already positioned well for it. I am beyond ecstatic to trade with everybody this week. I'm beyond ecstatic for the market condition, the situation that's being given. The only thing that could cause a hindrance is a larger gap up. And then it's just a matter of measuring your tolerance for, are you willing to buy and still let it maybe retest that support level? Or are you going to wait until it makes a new high on that 60-minute chart and use that high point break as your support level so you can continue building your positions? That's the only little hiccup we could have, is a large gap up. And I'm not even sure that that's what we'll see. Again, I can't express how excited I am for the upcoming trading week. I hope you guys make yourself available to come trade with me in the chat room. Those of you that are not members of the Coaches Roster newsletter, check out www.winningstockcoach.com. Go to our services page. Email me personally, coach@winningstockcoach.com. I would love to interact with you, answer any questions you have, and really help you and get you set up and ready to go to begin profiting and making money and taking control of your financial destiny. Good luck in the upcoming trading week, and God bless.